Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of technical analysis. Today, as usual, we will continue with Tesla on the daily chart, but I will also add a couple of other ticker symbols in the end, particularly NEO, AMD, Amazon, and NVDA. I wanted to start expanding a little bit on other stocks, even though I know that a lot of my audience is very interested in Tesla, but I do think that as traders and investors, we want to be as well versed as possible on other stock as well. There are a lot of potentials in the upcoming weeks, especially if the markets start to tip down, then we will want to look into various technical analysis for various stocks in order to find an optimal point to enter a stock, whether we want to swing an option or we want to just invest in the stock. I am both a swing trader and an investor, and I'd love to share with you my investing and trading journeys. So please consider subscribing. Without further ado, let's get right into it, and we will start with Tesla first. Even though I'm passionate about technical and fundamental analyses, I am not a financial advisor or a stock guru, so please do your own research and use my video for entertainment purpose only. I want to bring back this chart from stockcharts.com. It is a little bit different from my interface from Thinkorswim, but I wanted to point out once again the black candles that Tesla has formed on Wednesday and Thursday of this past week. The reason I want to show black candle is that in the past, for most black candles present, Tesla tend to fall. So what that tells me is that every time we see a black candle, we need to be cautious. It might not materialize 100%, but we need to be cautious. So in this case, yesterday, Friday, we see that Tesla had a very strong red candle here, which is a bearish engulfing candle. It ended the day at 736 and also ended the week at 736. So this is an important milestone because with this bearish engulfing candle, it seems to me bullish run has been temporarily halted. And you can see that the MACD started to tip down a little bit here. Accumulation and distribution also moved to the downside here. So needless to say, Tesla seems to be retracing back to the 50 days and 200 days SMA, which are still moving in tandem for the last few days at 691 right now. So Tesla still have about a $45 drop before it gets there. It probably could get there before it start moving back up. Let's go back to Thinkorswim real quick. So here is the usual chart that I usually share with you guys. Once again, we see pretty much the same thing. We see a bearish engulfing candle. Let's take a look at the weekly chart. So with Tesla ended the week at 736. Take a look at the weekly candle here. This is a failed rocket launch or an inverse hammer. It is very bearish, especially it started the week with a little bit of a gap up, and then it almost filled that gap by the end of the week. It went all the way up and then it failed to materialize. So this could signal the next couple of weeks of downside. And once again, 690, 691 is a fairly strong support. So strategically speaking, we know that we are about 3 weeks away from Q3 delivery results. That means that maybe toward the end of September, Tesla could turn around, but from now until then, we do have about 2 weeks. So I wouldn't be surprised if the next 2 weeks Tesla tipped down to the downside and hitting about 690 before starting to move back up. If for whatever reason Tesla moves fiercely down and get to below 690, let's say it gets to 680, 670, it could be a very good opportunity for a leap call option, especially we will be having 2024 leap call option available in the next couple of weeks here. I think it's important to keep that in mind because this is an optimal point to buy a leap call option for expiration 2024. If Tesla moves down to 641, which is a very strong support from previous levels here, it is a definite buy for me, both from a share buying standpoint and a leap option standpoint. I've been keeping my powder dry. I'm waiting for the right opportunity. I will start buying at 690. I will buy a little bit more heavily at 670 and potentially a leap call option. But if for whatever reason Tesla get to 641, I will be a heavy buyer at this level. For the shorter term, this is a 4-hour chart. We can see that Tesla has been consolidating, moving up, consolidating a little bit, moving up a little bit. But this particular set of candles here kind of reverse that trend and move it back to 735, which was the previous consolidation level. If it cannot hold this support and consolidation level, the next price target would be 704. But for now, the pivot points for Monday trading on the upper end, it is 754, midpoint 744, and the bottom pivot point is 716. The RSI seems to be at oversold, so we probably expect a little bit of a bounce on Monday, whether within the first hour or for the entire day. I can see the Tesla would bounce back up to around 740, 746 area. If it doesn't hold that, it could go all the way back down to 716 by the end of the week, and could be worse. But I kind of pray that it goes down a lot more this coming week, because I think subjectively, of course, that Tesla delivery number for Q3 would be really good, even though I know that Elon Musk has been warning employees of a chip shortage situation and encouraging everyone to try their very best due to supply chain complications. I understand all of that, but I do think that when Tesla employees who generally love their job, when they put their heads together, when they're trying to figure something out, they will find a way. And historically speaking, Tesla employees, including Elon Musk, have been very good at delivering last-minute results. So I have faith in them, and I do think that Q3 is going to be fantastic. This is the QQQ. I think it's important to note that the QQQ also moved down 0.75% on Friday, which in and of itself is not a whole lot, but it could signal reversal. Let's take a look at chart here. It is pretty bearish. The daily candle is a bearish engulfing candle, very similar to Tesla. The 50 days SMA is at 367. So I think that QQQ has another $9 to go. That is about 2.5% from here. So I think that the QQ could get to 367 or slightly below that by the end of next week. This is just a healthy pullback, I think. Let's take a look at SPY really fast to also gauge the S&P 500. Once again, in my video on the 9th, I mentioned that S&P 500 still have a little bit more to the downside in order to hit the 50 days SMA. So right now that number is at 441. It's right now at 445 at the end of Friday. So it does have about $4 more to go. On Monday it could gap up a little bit and move down. I do think that by the end of the week it could get to 441 or slightly below. If you notice on a longer term trend here, SPY has been bouncing off of the 50 days SMA quite a bit of time, right? So this time I could also get to 441 and then bounce again. That we don't know. We don't know when we don't know when a stock could bottom out, but right now a very strong support that we can see through past performance is this 50 days SMA. Let's take a look at Amazon in comparison to the Spider and the QQQ. Amazon did not have a major pullback on Friday, although it is still a fairly bearish candle. It also already pulled back to 50 days SMA at 34.60. So it looks like it could potentially moving sideways from here or dip a little bit before going back up. If this is just a slight retracement, I can't see Amazon falling any further down than this. We still see a daily bull flag that is forming here, and right now it is just consolidation. The next reach would get to 3600, which is where it would fill the gap. So I would definitely want to wait for Amazon to dip below 34.60. So maybe 34.50, 34.40 even on Monday or Tuesday of next week. And then I think that's an optimal point of buying a call to 3600. Another thing to note is that Amazon could also fall below 50 days SMA. And if it does that with volume, for example, 150% of volume or something like that, then do not enter a call because it could reach all the way to this red line here, which is 200 days SMA. Right now, the 200-day SMA is at 32.94. So if Amazon once again fall very quickly on Monday or Tuesday with a lot of volume, that is not a signal to enter a call. That might be a signal to even enter a put so that it go all the way down to 32.94. I know that's a lot of information to take in, but as with all trades, you could do it either way, right? You can play the downturn or you can play the reversal. The downturn, which is bearish continuation, which I think it will happen first thing on Monday, it will lose the 50 days SMA here, and then we'll see what's going to happen, right? The bull in me tell me that it will reverse and retrace back up to 50 days SMA after losing it for a little bit, and then it could form a bullish hammer, and then it could reverse. That's one possibility. The other possibility is that it have another bearish engulfing candle and it would get to about 34.20 or something like that, which means that it is not yet ready to turn around. And if it moved down with over 100% volume, then you know that Amazon is not ready to reverse anytime soon, and you could probably wait for it to fall all the way down to 200 days SMA before reversing. AMD is next on my list. AMD went all the way up to $122 and start retracing. Right now it is at $105 on Friday. It is important to note that on Friday there were virtually no volume for AMD. It was 39%. So it was down less than 1% and nobody was buying or selling AMD, which is very interesting. So it's hard to say that AMD is crashing when there's no volume and the move down is very little. So we'll have to see in the coming days and see how it behaves, right? It formed a golden cross recently at the end of July here, and sure enough, it started moving back up. Right now, it looks to me, just based on this chart pattern, it is a double top, but also a descending triangle. And it does seem like it's going to fall. The first support is 101, which is the 50 days SMA. The second support was the previous high, which is 95. And the next support would be 200 days SMA at $88. I don't know if AMD would fall all the way down to $88. If it does, I think the market would have to be very bearish and we would have to go through some sort of a retracement or mini correction in order for AMD to move down that much. But for now, I think that AMD has run out of juice from the buy side. You see all the buy volume occurred the last week of July, and it kind of taper out a little bit here. So if you are a short-term trader for AMD and you still holding on to shares, I think this is a good time to exit. If you are long-term shareholders, there's no reason to be concerned. Next on my list is NVDA. This one is a beast. It went up actually on Friday when the market went down. It has been moving very bullishly over the last 6 months or so, and it has been getting to the highest point, almost near the highest point in its history. So this would be with a 4-to-1 stock split recently. This is well into the $900, about $920 give or take, which is unbelievable. But I do think that it is due for a correction. If you look at the top here, the price action seems to be moving sideways, but RSI is tracing down. The volume is less than 100%, which is not ideal while the stock was moving up. So I do think that NVIDIA might be due for a correction here. I am a long-term shareholder of NVIDIA. Admittedly, I sold a portion of my holding when it get to about 228, 230, but I still have a healthy portion of my portfolio in NVIDIA, and I plan to hold it through the next drop, possibly buying back some shares, but I'll see how it behaves. For right now, I think I would not be longing NVIDIA if I'm a trader. And I would be looking at a retracement to about 205, which is 50 days SMA. The 200 days SMA is $160. I don't see NVIDIA fall from this level to 160 unless we have a market crash. But I do think that NVIDIA could get to 204 and probably slightly below 200 before going back up. Next on my list is NIO. I gotta say that this is not a good looking chart from a trading perspective. You got a head and shoulder here, and the right shoulder continued to be building out. One can even argue that you have another head and shoulder on this side. You have a death cross that were formed here. You have a golden cross that will form somewhere around here, and then an immediate death cross forming again within a short period of time. So you see that NIO formed a golden cross right around here, and then immediately crossed back down and form a death cross. And I know that the regulatory environment in China is not stable, so NIO suffers as a result, similar to Alibaba or Baidu. But I don't know if this is a good stock to hold in the short term, because the chart does look pretty bearish to me. Right now, with the second death cross being formed, and the fact that the stock gap down, consolidating around this area, I do think that it could drop again. The next level is about $34. That's what I'm looking at here. A while ago on my channel, I did a comparison between Tesla and NIO, and I do think that NIO has the long-term potential to win in China, whereas Tesla has the long-term potential to win globally. I still root for Tesla more than NIO for obvious reason. I live in the US and I am an American, but I think that NIO, if anything, it has a lot of potential in China. But with the regulatory environment that is not super stable in China, it's up to you how you view it. From a fundamental standpoint, NIO is a very good company. But from a regulatory standpoint, I don't know if it would be allowed to run the business the way that it wants to run, and to be able to garner market support and consumer support the way that it wants to, right? So it does face some hurdle and challenge. And from a technical perspective, this chart does look bearish to me. I would stay away from NIO if you have not gotten into NIO and you have been contemplating. I would stay away from it for a little while. And wait for NIO to drop. Note that there's a little gap here from $21 to $24. That gap was never filled. So it could fill this gap before going anywhere else. And if it does fill this gap, I think the $20 level could be something that you could contemplate getting back in. But this chart simply just builds the right shoulder out, and potentially once it's done building and consolidating, it's going to fall. So I wouldn't hold my breath with NIO. If you have been holding NIO and you are a diehard fan of NIO, I understand where you're coming from. It is a very strong company for the Chinese market, right? And if you want to continue holding, I think the temporary support right now is $34. If it dipped below 34, it should be able to pick itself back up just like it did this time and going back up. So that's the temporary number as far as I can see for NIO. Last but not least, here is Apple. I'm going to start with the weekly chart for Apple in order to highlight the fact that I do see a weekly bull flag for Apple, with the first price target for that bull flag is at 195. It does seem a little bit far-fetched given that Apple's been struggling around the $150 level for a long time, but I do want to point this out because I'm still bullish on Apple long term. On Friday, Apple did a 3.3% retracement due to losing a lawsuit that could potentially hurt its revenues in the billions dollars a year. That's not ideal, but I think that Apple will get over it. Will figure out a way to run its app store a little bit better and more compliant with the new ruling. That is not to even mention that Apple can always appeal the hearings. So it's always the possibility that something is going to change and that Apple is not going to be in the situation that it has been, that Apple is going to be in a different situation financially speaking. So right now, the chart does look bearish. The weekly chart looks really bearish. This is a bearish engulfing. And if you look 2 week combined, it becomes a failed rocket launch right here after a few weeks of consolidation. So you can see that Apple has a cup and handle for a little while, and I was super excited that it starts spiking above 137, which was a very key level for it to break out. And it did break out a little bit, but it consolidated way too long, broke out one more time, but the lawsuit held it back. So because Apple is also my long-term shareholding, so I'm just going to wait this out. My position in Apple has been reduced compared to what I had earlier this year, but I'm holding strong to the rest of the shares. I do think that 195 is probable. Probably not this year because it does have a long way to go, but sometime next year is entirely possible there. Let's go to the daily chart. The daily chart, once again, it looks terrible with this retracement here after a very long time of consolidation. This is a daily bull flag consolidating for a long time, from the beginning of July all the way until the end of August. 2 months of consolidation. Broke out a little bit, went up a little bit, and then start retracing back to almost to 50 days SMA. So on Monday, I do think that it will cross below 50-day SMA, which is below $147.67. And then hopefully it will start going back up. The support level that I have here is 147.67, and then you get 144, 142, 140, and then 137. Even below 137, I still think that it is bullish. If Apple, for some reason, crosses below 112, I would be a little worried, but for right now, I'm not too concerned about Apple. So this is it for this video. It is a long video, but I hope you find the information helpful, and I hope that gave you a little bit of perspective in trading next week. Do I think we're doom and gloom in the stock market? I don't think so. I think we're due for a correction for quite some time. All the stock has been overbought for quite some time, so this is just a matter of time. Having said that, I do expect a little bit of volatility and bearish action next week. Hopefully it will flush itself out in the week and maximum 2 weeks, and then by the end of September we start seeing it going back up, assuming the macroeconomics environment stay the same. If the Fed for whatever reason recognizes that inflation is out of control and start raising interest rate, then we're looking at a major correction. So everything is still up in the air. Just based on chart alone, I don't think we're doom and gloom, especially if you look at the spider and the QQQ. We are still well above 50 days SMA. And we are due for a correction back to 50 days SMA, which is completely normal. So hopefully it will flush itself out and give us an opportunity to buy some and hold for a little bit longer. Until the next video, bye.